Jason, very good afternoon to you. Good morning from Hong Kong. I must ask you, first of all, your reaction, and of course, all your clients' reaction, if you can, about the idea of China buying Italian bonds. If it wasn't for China, what would happen?
Well, we'd have to find somebody else to be the buyer, and someone else, some magical force to allow the market to go up. You know, when I look at this, it seems to be that the market wishes the world to be a certain way, and in fact the world is a different way. And occasionally we get these stories that China's buying some big pot of money somewhere, will come in to rescue us. But in reality, there was a story in October where China was going to be buying Greek bonds, and I don't think that situation has quite worked out. So I think we got to go beyond the day-to-day movement of, hey, here's this headline, and that's somehow going to save us.
What about, I mean, today we're having a €7 billion auction of bonds in Italy again. So on the eve of that, they're going to buy it. We're seeing a lot of auctions in Europe. As a bond investor, I mean, how are the auctions playing out so far in Europe? Again, they're holding up pretty well, aren't they?
They actually are holding up fairly well. Obviously, you've had multiple buyers and official buyers, certainly away from the rumored China buyers, of Italian bonds. And so we briefly saw those yields on 10-year bonds go above 6%, which a lot of folks believe is a crucial level, and then come back down. I do question the timing of this release, or the timing of the story, given that, as you say, there's going to be $7 billion in auctions tomorrow. So we'll see how those auctions play out. But ultimately, there's been so much official buying. I'm wondering where the real money buying would come in if absent all that official buying.
Now, the impact, of course, the euro is weak. The dollar actually benefits from this as well. We've seen PIMCO overnight. We know that he's raised, or Bill Gross has raised his US holdings to 16%, the highest since December of last year. What does that say about US Treasuries right now? Very good value?
I don't think Treasuries represent very good value. But it's true that the money flows away from Europe, away from sort of riskier currencies, would tend to find their way to the U.S. dollar, in part because of credit, despite what S&P would say, but also in part because of liquidity. If you think about times of market stress, they're about credit, but they're also about liquidity. And clearly the U.S. has lots of liquidity. But I think even in the U.S. dollar market, there are much more interesting things to do with your money on the debt side and on the income side than just buy treasuries. Corporates are very interesting. Even dividend-paying stocks certainly further down the risk spectrum, but those provide plenty of income, maybe more interesting than a 10-year treasury that has a negative real yield.
And Jason, again, Tim Gartner speaking at the G7 meeting in Marseille about, Europe, get yourself together, speak with one voice. But meanwhile, the US have their own debt issues. I mean, how is that impacting, in your thoughts, investing in treasuries?
Well, that's absolutely right. There is, as we talked about, a credit issue. I think that the U.S. has debt issues in the sense that the political process is very difficult, just as we're seeing the political process in Europe being very difficult. But in the U.S., we're having a difficult political process when 10-year treasuries are yielding below 2%. In Italy, or in some of the now called GIPS countries, we're having these kinds of political difficulties when yields are much, much higher. So I would argue that the political process in both cases, and the combination of economic costs and weighing that versus political costs, is very difficult in both cases. But in Europe, a lot of these problems are being dealt with because they have to be dealt with because the debt costs are unsustainable. Whereas in the U.S., at least for the moment, debt costs are very, very low.
Jason Brady, many thanks for joining us. Jason Brady from Santa Fe.